SoFi stock is on a roller coaster. It has been up and down in recent months. The stock trades at $12.93 today. It doubled since last October but then cooled off. This stock is not for the faint of heart. SoFi is a fintech company. They do a lot of things in finance. They have loans, financial services, and technology. This makes them exciting to some investors, but it also makes them risky. SoFi wants to be a big player. They aim to be a top 10 financial institution. That's a big goal. They're growing fast. They have 10 times more customers than 5 years ago. But can they keep up this pace? The next few years are key for SoFi. They need to prove they can make money. They also need to meet their goals. It's a gamble, but one that some investors are willing to take. Analysts are split on SoFi. Some are bullish, others are bearish. JP Morgan sees potential. They set a $16 price target. That's a nice gain from here. But other analysts are not so sure. BofA and KBW are cautious. They have $12 and $8 price targets, respectively. That's below where the stock is trading now. They worry about SoFi's high valuation. They think the stock is too expensive. Mixed opinions are normal for growth stocks. SoFi has a lot of potential, but they also have a lot to prove. Investors need to decide who to believe. Do your research and make up your own mind. SoFi's CEO is ambitious. He wants to disrupt traditional finance. That's a tall order. Big banks are not going down without a fight. But SoFi has one advantage: technology. SoFi is built for the digital age. They have no physical branches. This keeps their costs low. They can pass these savings on to customers. This gives them a competitive edge. SoFi has a lot going for it. They are profitable. They have a $2 billion loan agreement, and they could benefit from political changes. Let's break it down. SoFi achieved GAAP profitability in 2024. That's a big deal. It means they are making money. They also beat earnings estimates. This impressed Wall Street. SoFi signed a deal with Fortress Investment Group. Fortress will buy $2 billion of SoFi's personal loans. This gives SoFi more cash to lend. It also shows confidence in their business. President Trump wants to shake up student loans. He wants to reduce the government's role. This could be a boon for SoFi. They are a major player in student loan refinancing. SoFi is firing on all cylinders. They have momentum, but they need to keep it up. Competition is fierce. Fintech is a hot space. SoFi needs to stay ahead of the curve. SoFi is a high-risk, high-reward stock. They have huge potential, but they also have a lot to prove. Investors need to be careful. SoFi's valuation is a concern. They are trading at a high multiple of earnings. This means investors are betting on future growth. If SoFi stumbles, the stock could crash. SoFi has ambitious financial targets. They want to achieve a 20 to 30% return on equity. That's a high bar. It remains to be seen if they can pull it off. So should you buy SoFi stock? It depends on your risk tolerance. If you're comfortable with volatility, SoFi could be a home run. But if you're risk averse, there are safer bets out there. The bottom line is this: SoFi is a company to watch. They are shaking things up in finance, but they are not a sure thing. Invest at your own risk.